Alright, imagine it's late Sunday night. Markets are opening, traders are scanning headlines, and the mood shifts in minutes. People were hoping the situation in the Middle East might cool off fast. Instead, the opposite happens. A counterproposal from Iran gets rejected, the political standoff hardens, and suddenly the story isn't peace talks, it's oil.
And when oil becomes the headline, inflation is never far behind. Because if oil climbs, fuel costs rise, shipping gets pricier, and then a whole chain of everyday stuff starts creeping up. That's the part the bond market hates most. Exactly. Bonds and inflation have a complicated relationship, but on days like this, it gets simple. Higher inflation risk tends to push bond yields up, and when yields rise, mortgage rates usually follow. So after last week's steady slide, this week starts with a jolt upward, about 7 basis points on the day, which feels dramatic because it's coming right after that streak where rates fell day after day. 5 straight days of improvement can make people feel like a trend is locked in. Then one geopolitical surprise later, and it's like the market says, not so fast.
But it's worth pointing out, even with the pop higher, rates still aren't back to where they were before last week's rally lower, so we're not erasing everything, we're just back in that familiar place, uncertainty, and the next steps depend on whether tensions cool down or flare up further. And this week doesn't exactly offer calm even on the calendar. There are economic reports coming that are aimed right at the inflation question, especially looking back at April's price trends. If those numbers come in hotter than expected while oil is also rising, that's when you get real volatility. Right now, after that initial sell-off, markets are kind of drifting sideways, catching their breath. But it's the kind of quiet where everyone's still staring at the same 2 dashboards. Any new developments in the conflict, and any sign the inflation story is heating back up. So if you're listening and thinking, what's the clean takeaway? It's this. If oil keeps climbing, mortgage rates have a strong chance of climbing too. The connection is unusually tight at the moment because fuel prices touch so many parts of the economy.
Now, speaking of big moves and big numbers, let's pivot, because there's another headline that feels like a different universe, but it's still about money and expectations. Longbridge Financial just dropped a stunning profit report. They posted about $57.5 million in net income for the first quarter, and that's not just a good quarter, that's more than what they had expected to earn across all of 2025.
That's the kind of result that makes people recalibrate fast. When a company clears a full year expectation in a single quarter, it doesn't automatically mean every quarter will look like that, but it absolutely changes the conversation. Investors, competitors, everyone starts asking what's driving it and whether it's repeatable. And now we get to the part of the episode that feels like it belongs in a totally different lane, but maybe it doesn't. Because while some people are tracking interest rates day by day, others are tracking something even bigger. How long we can live, and what it will take to get there.
There's research floating around that asks a surprisingly emotional question. What if one of the keys to human longevity isn't just medicine or diet, but moms? It sounds almost too simple at first, but the logic is evolutionary. In highly social, long-living species, humans, certain whales, primates, offspring depend on their mothers for a long time, not just for food, but protection, learning, social development, survival skills. That dependency doesn't last weeks, it lasts years. And when a child's survival is strongly tied to a mother's presence, natural selection can end up rewarding mothers who live longer, because a longer-living mother improves the odds, not just for her child, but potentially for grandchildren too.
Researchers who watch primates up close talk about how obvious that bond is. You can see it in an infant's focus. For a while, the entire world is basically mother. Safety, food, comfort, direction. And even when we grow up and dependence fades, that early bond doesn't really disappear, it just changes shape.
So at the same time, the market is debating inflation prints and oil spikes. Science is pointing out something almost poetic. Our long lives may be connected to long relationships. Not just biology in isolation, but biology supported by caregiving.
And then there's the more futuristic lane of longevity where the question becomes, what do we do with the biology we've got? That's where regenerative medicine and the fight against inflammation come in.
One of the recurring themes in that world is inflammation as a driver of aging. The idea is that if chronic inflammation accelerates breakdown across the body, then dialing it down could be a major piece of staying healthier longer. Not a magic switch, but a big lever.
But here's what's interesting. Even when the science is still catching up in places, the business momentum is real. Wall Street is watching the demand for anything that sounds like living better for longer. Case in point, Lucid Capital Markets has initiated a buy rating on enhanced stock, basically saying, we think this longevity wave has legs.
And it's not only about supplements, there's a more concrete, testable side too, like using genetics earlier and more broadly. Human Longevity Incorporated is putting out a whole genome sequencing report priced at about $599, using AI to help flag disease risk before symptoms show up. That's a big deal because genome sequencing used to feel like something reserved for the ultra-wealthy or specialized medical cases. Make it more affordable, pair it with better analysis tools, and you move it closer to everyday preventative health. And then there's a final twist that brings us back to that earlier theme of relationships and connection. Because longevity isn't just labs and biomarkers. Even big institutions are leaning into the social side, like Manulife launching a Global Impact Week, connecting volunteering with well-being and community like a spa day for your soul, which honestly is a nice reminder that living longer isn't the whole goal. The real question is, how do we stay healthy, connected, and resilient while we're here? So today's story has two tracks that keep intersecting. On one track, the near-term world, conflict headlines, oil prices, inflation fears, bond yields, and mortgage rates reacting in real time. On the other track, the long-term world, profits in financial companies, massive bets on longevity, genome sequencing, and the human relationships that may have helped shape our lifespan in the first place. And maybe the common thread is this: uncertainty makes people reach for stability. In markets, that's stability in prices and rates. In health, it's stability in the body, and in the support systems around it. This week, we're watching oil and inflation data. Over the next decade, we're watching which longevity promises turn into real outcomes.
If you take one practical thing from this episode, let it be this. Keep an eye on oil if you care about mortgage rates, and keep an eye on evidence if you care about longevity. There's money pouring into both stories, but only one thing holds up over time: results.
Please subscribe at IamHealthyMoney.com. It would mean so much more than you know. I will continue to bring you fascinating subjects with all the research so you don't have to do it all alone. We will learn together, and then wait until the end of each video for a sneak peek into the next research project. Life has its ups and downs, but you're not alone.
From 10 to 110, we're in this together, right here, right now.
We love ya.